Hey, good morning. Let's go over today's trade plan. So heading into the open, we had pre-market resistance at 15 to 17. That's an area that the market has already taken out. And above 15 to 17, we can get a move towards 26.50, and 31.5 to 33.5 is the initial resistance zone on the day. Now, given how bearish the market has been overall, we still have to be very cautious and careful on initiating any longs at aggressive prices. But heading into the open today, the overnight session has been more dominated by the buy side. So even on the short side, we want to either wait for a turn in the market and see some downward momentum, or get a failure in one of the other markets, in Nasdaq or the Russell, or just wait for better trade location. So above 15 to 17 would bring the 26.50 into play, and possibly 31.5 to 33.5, which is the initial resistance area. So keep an eye on the other markets. I think they're going to be a pretty big clue and a tell off the open on which way ES can head. So if Russell is able to maintain itself above the 26 to 27 area, and Nasdaq is actually holding above 4100, then there's still potential for ES to go a bit higher. But if those other markets start failing, especially Nasdaq falling below 4100, and if TF fails to hold above 26, then that can result in a reversal in the S&P back down to 1975 to 0275, and below that we have 85 quarter, and 77.5 to 80 is the initial support zone on the downside. So right now the market is stuck in a balance. It's still trading within a range. We know that the larger time frame bias is still quite bearish, but in the short run, we can get these rallies in a bearish market, which is very normal when the volatility is so high. So right now we're still stuck in balance, and most likely, the market can remain within balance, but short term, we do have to be open to buyers stepping in, with the understanding that the sell side can still step in at the resistance zones, and we can get failure at one of the resistance zones, especially if the other markets are still contained within the last 2 days range. So on the upside, 31.5 to 33.5 is really the next decent inflection point in the S&P. From there, if we can break out above 33.50, we have some minor resistance around 38. But then the next major resistance is really 44.75, the swing high from yesterday morning, and the 47 quarter to 50.75, which marks the balance high from the last couple of days. So then that's the next major resistance zone. In the event of some strong buying above 47 quarter to 50.75, we have resistance at 62, 64.75, 67 quarter, 69 quarter, and then an open gap at 71.50, and resistance at 80 to 82. And again, we would have to see a lot of broad market strength, so strength in the other markets, Nasdaq and TF, and a lot of upside momentum in order to get any kind of directional break above the balance high of 47 quarter to 50.75. And given the larger time frame bearish bias, that's not the expectation. The expectation is for sellers to step in at the resistance zones and still contain the price action within the balance, and then eventually still actually fail. We still have to be open to that idea. Simply given the larger time frame bias, the sell side can still step in at pretty much any resistance zone, and we can get a pretty decent move lower. And on the downside, the first decent inflection point is really 77.5 to 80. We have this pre-market support zone, which is a small hurdle along the way, but the really decent support is 77.50 to 80, gap at 72.75, and then from there we have support 59.75 to 61.75, and 49.75 to 51.75. And bigger picture, I think that as long as the market is contained within the recent balance, so as long as we are holding below 47 quarter to 50.75, there's still a chance for ES to test the 1831 swing low from a couple of days ago, and the 26 to 29 area, which is a bigger picture support area where responsive buyers can be active on first test. But typically when you get this type of selling, you don't just leave that low untested. Usually you will retest it, but that's a bigger picture idea. So On the day time frame, we still have to be a bit more open to getting these short-term rallies and manage that and kind of adjust with the volatility. But the larger time frame idea is still more bearish, and for that reason, we have to be very careful on initiating any longs on the day time frame, especially at aggressive prices, right? So, like for example, where ES is trading right now is a fairly aggressive price because the other markets are running into resistance, and that can trigger a pause and then eventually a reversal in the S&P. So we still have to be very careful on longs, still be more active on the short side, but also be aware of the fact that we're in a very high volatility environment, and in the short run you can get these pretty crazy rallies and rips higher, which typically end up failing and turning back down. But in the short run, we can get some short-term buying, and we just have to be ready for that. So if we continue to hold above 15 to 17, then 26.5 and 31.5 to 33.5 is a possible target on the upside, and then sell side could be active there. So that's the context we're in right now. Let's see how the other markets hold up off the open, whether they end up failing at resistance or actually getting some sustained buying. NASDAQ has been leading the way, so if we can get a rejection in NQ, then that would open the door for a better downside move in the other markets. And even yesterday, NQ was short-term stronger than the other markets. So if that can fail, or if that can hit some decent resistance, and at the same time ES is also hitting resistance, that can be a good way to time a short entry in the S&P. So those are the main ideas. Let's see if the sell side can contain ES within the recent balance, and we'll take it from there.